Welcome in, everybody. All right, we got Joey with us today. We got our little dog here today. We'll give everybody a bit of time to come in, start strolling in. As normal, 50 likes is we're going to do some giveaways on accounts. So today, Joey is going to be sharing some strategies with us, or a strategy that he trades, has a pretty good win rate. It's pretty simplistic, which is really cool. I'm excited to hear about it. My dog got real quick. Good morning, good afternoon, wherever you guys are at. Good evening, I guess. Let's go ahead and start this.
What up, chat?
Yeah. So this is
How we
Joey.
doing?
And Joey is going to hook us up with some knowledge today. We love getting into people's strategies. We love talking to traders that actually trade and actually think about risk and stuff like that. They're just not out here gambling. So it's great. I'm super excited to have him on today. So let's turn it over to Joey. First, maybe we'll get into like how long you've been trading, what got you into trading. Were you like all of us and, kind of found it, by chance, or it is something that you always thought about? Where'd you start? How did you start?
Yeah, man, I have to think back on how long I've been trading. It's I don't really keep up with it anymore. I think I've been trading for about like five or 6 years now. Full time, I would say, for roughly about 2. But really, like, I saw, I got started with trading when, crypto started kind of becoming a thing. And me and my buddy, we were like just trading like XRP and things like that, just kind of off our phones, just having fun with it. I think that was my introduction to trading. But then I saw another YouTuber swing trading stocks, and I kind of I transitioned into being a swing trader, trading equities and trading the whole tech sector and things of that sort. And then from there, I saw somebody else day trading futures, and that's where I made the jump into futures, and I haven't turned back since. So that's kind of been my
It's
intro.
kind of interesting, like the transition, how people go from like trading this and then maybe stocks or options, and then they find futures like, I don't want anything else. Futures is good to go. It's just seems like the most level playing field, I guess, for futures. You can go both short, long. There's no issues with like locates or anything like that. It's just a lot simpler. That's awesome, man. So kind of the same, I think a core group of people all started around that 5 to 4 year mark, especially around COVID, where people were bored sitting at home.
Yep.
So it's kind of cool. And it's what's weird is everybody has their own way of trading. So let's dig into a little bit about your methodology behind trading. What system you're trading right now, if you don't mind sharing. I know you were stocking a trade, so I don't know if that trade is almost ready to go or where we're at on it. If you don't mind sharing your screen.
Oh yeah.
It looks like Josh got his camera working. So
hello. Sorry I'm late.
Josh. You're good.
Yeah. So one of my bread and butter strategies, something that a lot of my community has started to use as well, is the initial balance. It's the first hour of the trading session. Now, I do look for trades before the first hour is set, but once we have the initial balance, the high and the low that first hour, that's where I really start looking for some trades and trading some failed auctions, either to the upside or downside. And I can go over that in a little bit. Or breakouts and continuations of those areas. It's I would say it's kind of like how people trade the 15-minute orb, so to speak. But the failed auctions on these are a little bit different than that particular trading style. And so that's my bread and butter. Before the initial balance is set, I'll look at levels like Asia levels or London levels, take the lows and highs of each of those sessions and try to find areas where the NASDAQ is likely to sweep and maybe find some strength and reverse out of those levels. I guess you can call me a reversal trader. That's kind of, I guess, where most of my trades take place. But I will look for levels like that and try to find areas where the NAS is likely to reverse out of. And the NAS, for everybody that trades the NAS, the NAS is very temperamental. It likes to go sweep levels and wick out of them, find strength, and completely reverse in the opposite direction. And so that's where I have found a lot of my success and a lot on the initial balance. as
Got
well. And
So help us, like, how do you find the initial balances, or like an indicator or something? I see that you're using TradingView. It looks like there is an indicator for it, but anybody that might be interested in, hey, I want to maybe back test this or something like that. What is the indicator called? Is it just called initial balance, and then you set it up for like an hour, or?
Yeah, so this is actually my indicator. I partnered
Okay.
with Lux Algo. They created a indicator for me, and it's just called Joey Morgan Initial Balance Signals. And it indicates where failed auctions take place, or like breakouts and continuations take place. And so this is what I just use. There are plenty of IB indicators. Mine is technically a paid version, so there are like a ton of free ones that you can use that'll automatically, mark out the IB high, the IB low for you. You can manually do it yourself. All it is the first hour.
However, let's do the shameless plug. You do have a paid version. Your version works. That's what you trade using. Yeah. So if anybody's interested, TradingView, it's his name. He does have a paid version. So if you want to check it out, that's there. Joey Morgan. What is it? Initial balance signals.
Yep.
Okay, cool. So, initial balance is generally like 1 hour, or kind of similar to like an orb strategy, 15 minutes, stuff like that. 1 hour is a bigger time frame. So with that, how are you, like, what's your entry methodology? So I know that the area is there. We can see the area, but how would you get into a trade using that? Like, what would be like, hey, this is what I'm looking for. What's the trigger?
So I look for failed auctions, and essentially what that means is we break either above or below the initial balance high or low. So like in this example, we broke below the initial balance low, and we're kind of just consolidating below it. But if we do get a break back above the initial balance low here, so if we break above, that line, then I'm gonna be looking for an entry to take this long and either take it back up to, the 50% mark of the initial balance here, or we could take it all the way back up to the initial balance high, right?
Okay.
And so
then where would you put your risk on that? Like, where would you put your stop? Just below that pivot area there, or is it like some other?
You got to size appropriately. So like, I mean, my stop loss would technically be below these lows here.
Okay.
That would pretty much invalidate the trade. Or if I did take a more aggressive entry where I got long, say like up in here, which is well above, my stop loss might be below the initial balance low, or somewhere in that general vicinity, right? It just kind of depends on the risk and my position sizing and where I'm at on the trade. And so, but that's really what I look for. And I can show you an example of this trade here. We've actually had a day that played out really, really well on the IB. Let me actually zoom out a little bit. So like this day here, what was this? Monday was an initial balance like dream. So here, this would have been a technical failed auction. You can see the X here. This is what my indicator indicates. Tells you, hey, a failed auction took place here, and we were traced all the way back down to the initial balance low here. Let me get my brush tool here. Draw. There we go. We were traced all the way back down to initial balance low. You can see here. And then once we found strength and we broke below it, closed back within it, found strength back up to the initial balance high.
Right. Okay, so you'll actually play both sides then.
I will, yeah. So like up here, I would have taken a short. I mean, I think I did take the short on this trade. We broke the initial balance high, could not have continuation above it. There are times where we do get continuation, right? It's not every time that we have a failed auction, but you'll find these happen more often than not, where you'll see a break above this range and you'll see a failure, and you can either target, it'll retrace 50%, which is this yellow dotted line. It'll either retrace 50% of the IB, or you can sometimes catch the full retracement. It kind of just depends on your trading style and how you trade. It's like everybody has their own trading personality. Some might not want to hold this entire way. Some might want to take 10, 15 points out of this, and that's perfectly fine. This just kind of gives you a visual representation of like what you could expect on a failed auction. And so this was an IB dream here.
Cool. Yeah, that's awesome. You have like a real clear, you can describe it very easily. Sometimes I meet with traders and like, hey, what do you do? And they try to like tell me, and I have zero idea what they're doing. Not because I don't understand, it's just way too complicated. But you have a clear target, you have two clear targets, you have an idea of where you want to risk, and then which gives you an idea of how much you need to, how many contract size and stuff like that. So really, really cool. it's awesome that you are sharing this with people.
I missed a little bit at the beginning, but cool stuff. So I'm curious. A lot of people complaining lately because of the volatility, getting wicked out. You were mentioning your trade on the NQ like most degenerates would.
Yeah.
So how has that been for you? Like, how much are you taking into an account previous days? Are you taking news into account? Are you taking Is there more context there? Is that sort of some of the Joey juice going on?
Yeah, so I mean, it very much depends. I mean, we do have a little bit extra volatility in the markets right now, just given everything in the Middle East. You have tariffs, you have rates, you have Powell speaking. So there's a lot of different factors happening in the world right now that could affect price. I try to keep that in the back of my head, but also I still try to recognize when my setup is happening. And with that, I might be sizing down a little more because I know that there is a lot of factors affecting price. A headline could come out, any second that affects price and sends the NASDAQ down or up 100 points, right? And so I'll make sure that I size appropriately, especially at this point of my trading where I'm not really looking to make $10,000 in a single day. Like I'm perfectly fine with 3 to 5 micros starting a trade and maybe adding to a position if I get into a winning spot, or cutting my losses with just the 3 to 5 micros, right? So really just understanding, trying to take in market context. How has the market been acting on this particular day? How's it been acting the previous day? Do we have Daddy Powell speaking, talking about rate cuts or testifying, right? And so it very much depends on the context of the day.
All right, cool. I think we have quite a few questions kind of coming in, especially I think Nate is very interested in the expectancy of this, probably a hit rate, win rate, whatever you want to say. Where do you think we're at, or where do you think you're at with it?
Yeah, I don't have a hard percentage on it. I would say that I'm probably in like the 65-70% win rate with this.
Cool. Yeah. And what would you say your average R ratio is?
So I trail, right? So it can vary, it can depend. Now, generally I keep very good stop losses. It can be pretty tight. I really like to have those 2-to-1s. Sometimes I even get 3-to-1s, but again, I try not to have a set number, a set ratio, because I'm very much a firm believer I'm going to take what the market gives me. That's just how I've been trading, for the past, I would say, few months now, especially because I went through a major slump in the beginning of this year where just what I was doing before was not working for me. And I had to really change my approach and how I trade my own strategy. And so now I take what the market gives me. If it's a 2-to-1, I get a 2-to-1. If it's 3-to-1, I get a 3-to-1. If the market's going in my favor, I'm going to trail it and let it continue going in my favor.
Do you execute on TradingView, or do you just use this for analysis and then whatever prop or personal account you're trading?
Yeah, TradingView is usually my charting. I don't execute off TradingView. I will execute off either Trade-Evade, or if I'm trading on a Project X platform, then I'll trade off that. But TradingView is usually just my charting.
Yeah, something consistent to come back to.
Yeah.
So you have that up, and you're looking at that really for your to actually make your execution on the other charts.
Mm-hmm.
You're not just transposing levels or anything like that.
I also have 1 million monitors, and so I keep TradingView up, and just that way I can look at it and then just execute off other charts.
Yeah, you can't really take trades unless you have 3 or 4 monitors.
Yeah. Sure are you even a trader if you have 1 monitor?
I don't think so. You when you start, you're like, no, I'm good with 1, and then before you know it, you get 5, and you're like, oh no, I need all 5. It's
can't alt tab at all.
It's one of those things is once you start building, you just don't stop. You just keep going.
Yeah.
Cool. And then somebody kind of brings up a good point. What's your entry kind of criteria? Are you using pullbacks, or are you just kind of gonna jump in as it breaks back over?
Yeah.
Kind of talked about it a little bit. Do you track each entry independently, or do you just kind of this is all the same setup type of thing?
Yeah. So kind of just walking through, I guess the big question is what am I looking for to take the entry? A failed auction, a technical definition of a failed auction, and you guys can, if you've ever read the book Mind Over Markets, it's definitely It gives you a pretty good description on failed auctions in that book. But a technical failed auction is when you get a 30-minute candle closure back within the initial balance. Now, I don't always wait for that. Generally, what I find is if I do wait for that 30-minute closure back within the IB, then I might have missed the move, because a lot of times that 30-minute candle can break back and just automatically go back up to 50% or even the full thing. And so I trade and execute off a 5-minute, where, you know, if I see a potential for a failed auction to happen, like say here, for example, if I see us consolidate down here and start seeing us curl back up, and then we do get back within that IB low and we're showing signs of strength, I may take that trade, anticipating that a failed auction is going to be taking place, right? And so from there, I would be targeting at least 50% if I can. Now I'm trailing, right? But if I can target 50%, then I will. So it very much kind of just depends, again, on the context of the move. If we are getting some strength and getting good follow through back within that IB range, then I'll take that trade 10 out of 10 times.
Cool. All right, this is actually a really good question. Dragon Trader says, at what stage would you start trailing from the initial SL, i.e. after 10 points in profit? Good question.
Yeah. Generally after about 20, if I'm 20 points in the money, generally I'm at break even at that point. For me personally, I know a lot of people have opinions on break evens, and some people don't like going break even, because then if you're going to do that, you might as well get out of the trade. Like there's a lot of opinions on break evens. For me personally, if I'm 20 points in the money, I have no excuse to let the trade go red, right? I'm not going to let it go red on me if I'm 20 points in the money. And so at that point, I'm going break even, and then anything beyond, you know, that 20 point mark, I'm usually trailing my stop up, depending on where price is.
Awesome. Okay.
Are you using volume anywhere down there, or you just have it on there because a habit came with the default trading view template?
I look at it here and there. I wouldn't say that I'm like staring at it, you know, but I keep it on there just to take a little peek. I do use volume profile here and there, though. I will say I'll have it on my chart here, and kind of just see where value areas are, point of controls, things like that.
So are you, I mean, from what it looks like, you're basically like 1-2 trades a day. Is that what I'm seeing? Or do you take scalps in between, or do you have other strategies, or is this your bread and butter? It works.
So this is my bread and butter, you know, strategy. I would say, now I do take trades before the IB is set, right? So I might take 1 or 2 trades before we have this. I would say max trades that I take is no more than like 3 or 4. I'm usually probably in that 3 to 4 range, sometimes 2, sometimes even 1, kind of depends on the trade. But generally max 3 to 4 trades. Now, if before the IB is set, kind of what I mentioned earlier, like I'll look for those London lows or Asia lows or London highs, Asia highs, and try to find those areas where maybe the NAS will go up and test those and find, maybe sweep them and find strength, coming, rejecting them and reversing out of them and finding strength in the opposite direction. So I'll look for things like that as well before the IB is even set.
Another question, but for your entries, do you use the DOM to specify your input?
I don't.
Sounds like you don't, which is fine. Look, strategies don't need every single tool to work. And once you find something that fits your trading style and kind of fits your psychology as a trader, just continue to trade it. Not everybody will be able to trade his strategy, I can tell you right now. Those are some pretty big moves that you're trying to capture. And if you don't capture at least the midpoint or to the other side, then your risk reward is going to diminish very quickly, right? So you really have to be able to hold these trades much longer. And that might have to do with Joey actually trading swing trades in the past, where he's used to holding trades a lot longer, where a scalper traditionally may feel uncomfortable in these type of trades, right?
Yeah, I will say too, like, you don't necessarily have to. I mean, like I kind of like what I said earlier. Maybe I said it before stream, but everybody has their own trading personality. So what might work for me isn't going to work for the next person, or what works for them may not work for me. Everybody has their own personality in trading, right? And so you could still trade this particular strategy, and maybe you only captured 10 to 15 points if that's what you're looking for, and you could have a higher win rate doing that. So if you did trade a strategy and you only wanted 10 to 15 points, and that's generally what you target as a trader, then that's perfectly acceptable. You don't necessarily have to take the trade all the way back up to 50% or the full IB. It's kind of whatever you feel comfortable with, and just at the end of the day, finding that what's a high probability setup for you, right? Because there's so many ways to trade a strategy, right? So for me, I like to target 50% of the IB if I can, but that might not work for the next person. So you could take this general concept of a strategy and find a way to tweak it to make it work best for you. That could go for, trading the 15-minute orb, or for all the ICT traders out there. I know there's a lot of you. You could trade the ICT, like find ways to make ICT work for you. So it very much depends on who you are as a trader and like what you feel comfortable with.
So where are you struggling? Like where this all sounds perfect. Where do you get caught up in? Are you just being pretty consistent? The trade works or it doesn't? Or what's been going on with you?
Where I'm struggling,
are there any points of this where you kind of hit a wall, or you have losing streaks?
Yeah, what are your personal demons? Because every trader has some, or if they trade a little bit better, not just traded better, they would perform a lot better. And generally, some traders that have a very good trading strategy end up being break even because of the demons they're dealing with, right? So he's wondering, do you have any little gremlins on your back that mess with you, and what are those if you have them?
Yeah, I think every trader has those. I mean, no matter how deep you are in the trading industry, or how long you've been trading, or how good you are, everybody has something that is a trigger for them, right? I would say one of my biggest triggers, and I actually I think I made a video about this on YouTube, and it's funny because I had a lot of people relate to it. Right now, my biggest trigger is if I do take a trade and I go to break even maybe too early, and I do get stopped out, and then it continues to run in my favor. I would say I do struggle with that sometimes, and I'm okay with it, but I do still struggle with it sometimes. Or if the biggest trigger I would say is if I enter a trade that I'm right on, but maybe have the wrong timing, and the trade goes red, stops me out, and then immediately reverses and goes in my favor. I'm sure a lot of people can relate to that because it happens to nearly everyone, where you get stopped out, trade doesn't go in your favor right at that exact moment, takes you out or wicks you out, so to speak, and then it just runs massively in your favor, right? That used to be I would say used to be a major tilting point for me. I have worked on it, and I have managed it quite well as of late. I would say especially this year, I've worked pretty well at managing that, but still, even then, I struggle with it because it's like, nobody likes to be wrong when like you had the right idea, and that kind of ties into human motion too. And something I always talk about with my community is, as humans, we're naturally wired to not want to be wrong. It's in our DNA to not want to be wrong, right? And so trading itself forces you to think differently and learn how to accept that you're wrong. And that's something that every trader is going to struggle with, and something that especially I struggled with in the beginning. And so it's learning how to navigate that. And when those trigger points come into play, how can you learn to accept that you were wrong in that exact moment?
Do you allow yourself re-entry, or how does that look?
I do. I will re-enter. If I notice that my trade was right, I will re-enter the trade. Now, if I do get stopped out there, I'm done. I'm walking away. I'm not going to continue trying to re-enter and re-enter. I'll allow myself another entry if I notice that the trade is actually going in my favor. But if I'm wrong on that second one, then I'm usually done.
You said you've been sorry, Josh. You said you've been working on getting better at those areas. What have you done? What have you implemented? Is it something you exercise, or like what is it? Mm-hmm. I think people love to hear how you were able to find some growth in the area.
I go outside.
Okay.
Yeah.
I go time out. You get up off the desk and you're
it's something that I've really, I would say beforehand, like trading was like my life. Like I was at the computers all day, every day, and like just staring at charts, trying to find entries and stuff like that. And it's like I've gotten to a point in my trading now where I don't let it, take over my life. Like I have hobbies and stuff. If I'm wrong, I'm cool with it. Like I just bought kayaks. Like I've been going kayaking almost every other day at this point. And so I just load the kayaks up in the truck, and then I go out on the river and go kayaking for a little while.
How many monitors do you bring on your kayaks?
None. I try to.
No,
I
don't monitors. He's on his phone like this the whole time.
Yeah. He's got an array of
Trade,
phones like mounted on the front of the kayak.
Yeah.
Yeah, I'm getting away from the charts. No, that's good though. A lot of people struggle, and there's nothing like getting physically distant from even the ability to look at a chart.
I feel like that's probably one of the biggest things that traders really struggle with too, is like, they sit at the charts all day and try to find, entries. It's like, don't let it be your life, because then trading, I feel like at that point trading gets harder, because you do let it consume so much of your time and so much of your life that as you are just wrong more and more and more, you're more likely to go on tilt, or it just kind of eats at you, right? And then you carry it over into the next day because you spent all day on a random Tuesday staring at the charts being wrong, and then it carries over on a Wednesday, and it's like, it's just don't let it consume you.
Yeah, I think I think the space itself is pretty hard on that too, because you break your daily loss rule on one account. You're like, what deals are there for new accounts, so I continue to play the game.
Yeah. And also too, like, I mean, it's gonna eat at you either way, but it's like, are you gonna sit at your computer and let it eat at you all day? Or are you going to go outside, have a hobby, and do something, let it eat at you for maybe 10, 15 minutes, and then you completely forget about it because you're doing something else, right? And so I think that's what it comes down to for me, especially.
Yeah, that's good. How long ago was it when you could actually step outside, walk away? How long did that take?
Yeah. I would say I've been there for some time now. I would say maybe like end of last year, I would say.
Yeah. It's such a weird thing though, because it feels like it would be a contradiction, right? Because you generally, anything else in life, when you put in more work, you put in more time, you get crazy obsessed with it, you get better at it, right? With trading, if you put too much energy in and just get too consumed by it, then each loss like compounds, and it like builds up in your emotions, and as you said, it carries into the next day, and then the next day, and then the next day. So I found, at least for me, and talking with other traders, if you only trade like once or twice a day and then you're just done for the day, either it works or it doesn't, you make a lot more than if you just battle the market all day long, trying to find some edge, trying to do something. Like, you're just trading everything because you're trying to win the day, and it's like, dude, just be done. But it's really hard to do. And
it always reminds me of, like, if I have some problem at my house, like a plumbing issue, electrical issue, I'll go to Home Depot, and I probably have to go like 5 times because the guy there told me the wrong thing. But I know if I just keep going, I'm like, I can stay up all night and get it fixed. And it's like that same energy you want to apply to trading, and it's just not going to happen. If my plumbing was a game of statistics, my house would be flooded. So.
Very flooded, right?
Yeah. Cool. We got more questions or anything here?
Yeah, I think we have some more questions. I think we already did the giveaway entry. I don't know if Raj is gone. He said be right back. All right.
Yeah, the giveaway entry is live.
Cool. It is live then. It is live.
So like now, like the IB, we're kind of navigating away from it. So I'm not really looking for anything on the IB right now. We're still kind of trending down, and so there is no indication of any failed auction taking place. And so this is where I'm usually just kind of sitting out. We're also in that time frame too, where I'm already kind of done trading for the day. But if I do see something where it comes up into my zone here and we're indicating some sort of failure and we want to reverse out of it, then I'll still take that setup. But
what's your sweet spot for like trading period? Like, where do you try to take most of your trades, or where do you find you're the most efficient?
Yeah, I would say from open to about 10:30 Central Time. So that's generally where my sweet spot is. Anything after that, unless we get into like 11 o'clock central, I've noticed, volume kind of tends to die. That's noon Eastern. So volume generally dies around that point. And so I usually don't see anything that I like at that point. But I have been experimenting with trading gold in the evenings. I've noticed that gold likes to move anywhere from that like 7 p.m. to 8 p.m. Central Time. You get some pretty good movement on gold there. I know some people in my community also trade gold during that time, and sometimes we'll trade it together and stream it in Discord or whatever. But that's it's experimental right now for me.
So with failed auctions, you're always considering failed auctions as a return to your initial balance, right?
Yeah. So like here, I mean, it seems like buyers are trying to navigate back up there. I'm not overly convinced right now, but if buyers do find any sort of strength down here, which we could, we're in an area where we could potentially see some buyers step in, but we would need some volume to come through on the buy side and get us pushed back up into that IB low there and see a little bit of strength. Maybe we consolidate it for a little bit and then find some strength to move higher there. And that's what I would be looking for.
What do you do if it's like a tight initial balance?
That generally doesn't present the best setups. I don't really like small IB ranges. So see, IB high here is what, 548. IB low is sitting at 463. So not like huge. What is that? Let's just measure that out here. That is what, almost about 84 points. So that's pretty tight. Now that doesn't present the best opportunities because then again, it's like you don't have a huge range on the day. If I can get a larger IB, that like 150, 200 point IB range, those are nice. I love those days because you can generally get some pretty good movement on the IB there. But those tight ranges are generally not the best.
All right, who's your trader idol? And do you Matt buy trades? You talk like a
Matt buy trades. You mean trades by Matt? I get that a lot.
Yeah, I guess.
I get that a ton. There's been a lot of people tell me that I sound and talk like trades by Matt. I don't
announcing it here. This is his brother.
Yeah, I've heard that. Yeah, I've heard that. I don't really have a trading idol. I mean, it's hard for me to really say because I don't really watch anybody right now. I mean, I stream myself and I trade, so it's like I can't really say that I have a trading idol.
All right, not the traders. Just focus on the charts, guys.
Favorite book, most helpful book. Let's do that. That's a good one.
Favorite book?
Yeah, favorite book or most helpful.
Yeah, Mind Over Markets.
Mind Over Markets.
What gravitated you towards that? Did you just come upon it, or was that like a succession of a bunch of other education?
Yeah, it's just I came upon it and I started reading it, and it's one of those books where it's like you don't really just read it. Like it feels like a book like you almost just have to study because it goes over like so much in that book. But can you guys still see? I don't know if you guys still see me on screen. I think so. Okay.
Yeah, you're good.
So it's not really a book that you read. It's a book that you really just kind of like study through, and it's got some really good education, some good technical stuff in there, some strategies you could study, and I think it's a good resource for you to get a little bit deeper knowledge into like the trading space and how markets move.
And everyone, that's a Dalton book, so that's one we recommend too, for sure. And then there's another one he has, markets in profile, I believe.
Yeah.
Another, I don't know, was the book you're mentioning. I always forget them because I've just read too many of these things. I don't know if I read one you're mentioning. Actually, I'm adding it to my list.
Yeah, it's definitely a book I recommend.
Read the other one. Yeah.
Check out.
Yeah, really understanding just how market mechanics work, and not obsessing over this moving average, that moving average that you'll find on most YouTube channels. These are two-way auctions, guys. So
I will say it's not an easy read. It's not an easy one, but if you can spend some time, just kind of looking at it and diving into it, you can get some good knowledge out of it.
Awesome.
Yeah, these books aren't going to be, this is how you set up your platform. This is going to be more on theory.
Yeah.
And it's a good basis to have when you're thinking through how you could adjust your strategy. But it sounds like you got a pretty straightforward one out of the book, and kind of just made it your own and added the touching grass to make sure you stick with it. So
yeah, I mean, it's like it's hard to, I would say something, I do if I'm going to learn a new strategy, if I had to go back and learn a new strategy, I'm going to try to find a way to make that strategy work for me, right? Because again, somebody could have a strategy and teach it to me, but it's like how they trade that particular strategy, it may not work for me that way. And so I got to find a way to make it fit my own trading personality and make it work. And so that's just what I'd recommend anyone try. Like if you do learn something, whether you take the IB, find a way to make it work for you.
Cool. How are we doing with that giveaway, Raj? Aaron's got a very important question. He asks if, I don't know, do you have a TFD account at this point?
Right now, I
don't. Started trading with us.
No, right now.
Are you trading a lot of accounts? Are you one of those?
I don't trade a lot. I copy trade, if that's what you're asking.
Okay, you do.
But yeah, so like I'll trade, 5 accounts at a time. I try not to spread. Like I try to keep it tight. I don't really try to spread myself too thin, right? Because then I'll start looking for, if I try to start trading 20, 30 accounts or whatever, I'll start looking for trades that aren't even there. You know what I mean? So yeah.
All right,
we're gonna spin the wheel here.
You have the honor of doing the name read, which is always fun.
Okay.
And we don't want to butcher the names.
Giveaway.
Yes, do it.
Just to remind everyone, because people still do this all the time. If you've won before, you cannot win again. Like, share the wealth, guys. If we find out that you've won recently through our credit, then we're gonna just automatically leave it to somebody else.
All right, who we got?
Spinning.
I can't see the name, so I don't know. Wait till it pops up.
Okay.
Here you go.
Oh.
Please read the full name.
First last, please. First last.
Mizael Nitrushwa.
I think you nailed it.
Sounds good. Great. Congratulations.
I definitely butchered that. I'm not gonna lie. My apologies. Definitely butchered it. All right, let's do it again. Hold on. What we got?
Something easy, hopefully.
Hopefully it's something easy. Of course, it's not gonna be.
Holy.
Govindazami.
That was my guess. Oh, we didn't catch a last name there.
No way I was doing last name.
All right, congrats.
Do you want to get a little crazy, Joey, and give away your indicator? Is that something you can do?
I don't have control over that. That'd be a luck.
Okay.
Yeah, I would definitely. I'll tell you what. I'll do a giveaway. I'll do one for me. I'll get somebody an account. Yeah.
All right. We'll do a third one.
This is a big one right here. This is a big one right here. All right, spin away, Raj, please.
He's giving over his personal copy of Mind Over Markets. No, I'm just kidding.
Bora? I have no idea.
Congrats. We'll cover that one. So we did 3 today.
Nice. Congrats.
Cool.
Congrats.
I love how your strategy is so simple. I hope people take, even if they don't use this strategy or change their strategy, hope they have an interpretation now here that, things don't have to be complicated. You can live a chill life. You can go kayak. That's why a lot of people are here. They want less time in front of the charts, or
you'll be surprised at how far simplicity can take you in trading. I mean, I feel like a lot of people do overcomplicate things, and they'll have, if we touch VWAP and the MACD is this and the RSI does this along with the MACD and we have the SMA doing this, like it's like it just you're throwing too much.
Kobe stake flip over.
You're throwing too much information at yourself. Like they're all gonna show different things. You know what I mean? So it's like having that one that one trigger where it's like you can see it, you see how the market's reacting at that certain trigger, and it's just keeping it very simple.
And one thing, it doesn't sound like you did like a ton of data tracking behind all of this. You kind of just found your way.
Found my way. Yeah.
But to some extent, your brain is remembering some data of when it didn't work. Yeah. I think there's something in there. It took you a certain amount of time, but you started to negate the stuff that didn't work and focused on the stuff that did.
Yeah.
And that's where you landed here, and it's working. That's really cool. Yeah, I think this is a great example, guys, of just keep it simple, but have a plan. If you noticed, all the little details that we went over all add up to his plan. Find your own plan. He has some great ideas. Getting outside is one huge one. And we always say it. How do you recognize your tell? You know, if you're playing poker against people, you're looking at them and you're trying to figure out what's that guy's tell. When he's, you know, not holding a good hand, try to have that introspection and realize, hey, this is my tell. This is when I start to tilt. I just need to walk outside. Don't even think about it. Just get up and go. You'll have perspective when you come back in, or maybe you don't come back in at all. Maybe you just hop on your jet skis or your kayaks and you just take the day off. But get ahead of it. Once you're tilted, I'm sure Joey feels the same, and we're all the same. You know, we'll all start being in I want to punch wall mode. And it's hard to get out of it. You want to fight the market. You want to beat it. You want to have a good day. You want to tell your loved ones that you had a good day in the market when they ask. Skip all of that and get ahead of it. Get ahead of your tilt.
Yeah, 100%. I mean, the moment you can feel yourself kind of on edge, right? I mean, you feel yourself walking a fine line on your emotions in trading. And so it's just the moment you feel that, just do yourself a favor, just go do something else, right? Because you don't want to give yourself that extra shove over the edge and then do something stupid.
How to avoid FOMO when your setups do not occur. To sit on your hands and wait. But how?
You eventually kind of train yourself. I mean, that's the thing with trading too. It's like there is no secret sauce to managing things like that. It's like you eventually kind of find your own way of managing it. Again, for me, I would say that if I do miss an entry, the beauty of trading is that there's going to be another opportunity. It's not like I missed the one and only opportunity there's ever going to be in the market. There might be another one that day, or there's going to be more opportunities later in the week. You know, it just kind of depends. But I don't ever try to let one day affect my whole week, because there's always going to be more opportunities to take.
And Joey's got a system that's working. It's working on that, mostly that one market. He talked about trading gold later, but generally the strategy he's taking does work on his one market, and he found a way to work with it. But one angle to kind of set you up for success could be maybe monitor multiple markets, so you have perspective on, oh, look, the market that I'm obsessed with has nothing right now. I'm trying to force an opportunity, but maybe the market has no opportunity. And looking at more than one market for that same strategy, you might need to augment it a little bit based on how the market works. But overall, I found if I switch to a different market, I can be like, oh, wait, the market I was looking at and I was trying to force a setup in, it's really not a good setup. And seeing another market actually forming a setup, you can find more opportunities. Again, I wouldn't suggest just blindly feeding that itch to trade, because you can still end up in the same bucket of.
You have to be careful there too, because you have to be careful there, especially if you. This is just my opinion, but like if you balance between markets, if you have a bread and butter market, how that market moves. You learn it. It has like a pulse. You know what I mean? You kind of you learn how that market moves. Like the NASDAQ, for example, notorious for sweeping levels and wicking out of them, right? It's very temperamental. And you stick to a market for one particular market for so long, you learn how it moves and you pick up on its pulse, right? Whereas like if you do bounce around between multiple markets, you don't necessarily know how those markets move or how they can react at certain levels, right? Whereas the ES, for example, is not as temperamental as the Nasdaq. Has a little bit more cleaner movement. Gold has its moments where it's nice and clean. Sometimes it can be temperamental and get really volatile. So it's just it just depends, right? And so you have to be careful, when you are bouncing, just make sure that if you are looking at other markets, that you're at least familiar with them, sure, and you understand their movements and how they move.
Right.
For me, what was helpful to stop overtrading is look at your data. Like, and if you're tagging your trades and they're like, hey, for instance, your opening range strategy or your initial balance strategy, right? If you look at the data and all the trades that you take with that have a very good win rate, you're statistically around a 2R or whatever, and then you look at all this other stuff you're trading and all your win rate is like basically garbage, then it's going to help you stop doing the stupid trades, because you're going to see, hey, if I can just stop doing XYZ trades, I would actually be profitable. And that's something you can actually do in our platform, where if you go into our P&L simulator, you can actually go through all of your setups and remove trades and see how, like, hey, if I totally remove this setup from all of my trading, I would actually increase my win rate by 5%, 10%. Or if I stop trading, for instance, after 12 o'clock, like, oh, wow, my win rate goes up another 10%. That's what helped me, because I'm very analytical. Data helps me to be like, hey, dum-dum, look at what you could do if you just stop doing this. And then you start realizing, like, trading's kind of addition by subtraction. So you make more when you do less, as long as you're taking the right trades and you're avoiding the dumb trades. And it's so different because generally you work harder, you get more. But with trading, like, if you just trade the good strategies, it almost feels like you're cheating, because you only take 2 trades and you're like, oh, I'm done for the day, and you can go kayaking or whatever, right? That's where you want to get to. You don't want to just die to the charts every single day, because I did it for years, just like Joey did, just like Josh did it. We all became obsessed with charts and way too obsessed with trading, where you're just 16 hours a day type of thing, right? Yeah. Like, as soon as you wake up, you're looking at replay, you're playing the charts, you're looking for everything, and you're thinking you're going to find some holy grail. It's like, no, you already found strategies that work. Like, just trade a couple trades a day, focus on one strategy to start, and just see if you can follow that strategy every day and let the probabilities play out. That's all you got to do. And it's hard, though. It's hard to disconnect, because as humans, you don't want to lose. As humans, you want to feel like you're putting in the work to get the reward, but it's just not. It's not how trading works. It's weird.
Hard. You go through the steps. Everyone goes. I think most people, the trading day's over. You start thinking of sky's the limit tomorrow. Tomorrow's going to be great. I'm going to follow everything just right. Then there's all that time. You wake up early in the morning. Maybe you're doing the exercising. You eat a good breakfast. You're talking to your family. You get in front of the charts. You sit there. You wait an hour. Take a trade. It fails. That's a lot of lead up. Where in any typical job, you'd be like, no, I'm getting my job done. But you have to be able to coexist with that all that time, all that thinking, all that positive energy going into, I'm going to have such a great day. And you take a trade and it just whips you out because you're, a degen trading the NQ. No offense, Joey. No, I'm kidding. Plenty of good opportunity in Q. Just treat it with respect.
Like Josh is saying, you're patient, you're waiting, you're doing everything you're supposed to do, and then you lose anyways. And then you're like, what the heck? I did everything I was supposed to do. Yeah. And then the market made me lose, right? Or like Joey talked about earlier, you get into the trade, you get wicked out of it, and then it goes without you, and you're like, oh, yeah, it goes to my target without me after wicking me out. That's great. Thank you, market. Thank you. So it's tough.
So just set up your desk really close to the front door so you can get out of the house as quickly as possible.
Yeah. Also, too, it's like I feel like for me, trading is like it gives me the time to work on other things too. Like, even if I'm not getting outside, like, trading isn't all I do. Like, I don't just trade and then go outside and go kayaking or whatever. Like, I have other things that I like to do and build, whether it's like business wise, or if I am like trying to learn a new skill or something that I can maybe work with later. Like trading allows me to do that. Maybe it's just like I can trade for a little bit and then I can go back to being my content creator self. Like it's kind of just whatever I'm doing in that particular time frame, right? And so trading is not meant for me to do it like full time every single like day. You know what I mean? It's sure I'm a full time trader, but I'm not trading like 8 hours a day to make.
And
my
it's not
money.
to say like, you know, I'm sure if Joey sat there, smart guy, he could sit there and figure out how to squeeze 10-20% more out of the market if he spent all that time. But he's making that trade-off for himself, and he's being objective about it. He's like, I have my strategy, I take my strategy, and then I can do what I want.
Yeah. I also too, like, I mean, if I take a trade, like now I don't have a particular P&L that I try to hit every single day, because again, I don't try to put limitations on myself. Again, I'm a firm believer in taking what the market gives you. But, if I get into a trade to where it's, I make $400, $500 on that one particular trade, like I'm done. I have no need to try to trade again. Like, could I take 2 more trades and maybe make it at $1,000? Probably. But I have no need to. And so it's like, if I come to the chart and it's, right at open, or say we're 10 minutes into the open and I see my setup or see any particular setup that I traded that I like, then I take it and I make 500, then I'm done within the first 10 minutes of the day. And I don't have to stick around anymore. I have no need to. And so that's kind of where I'm at now.
Yeah, I love that. Cool.
Because like, at what point, right? At what point do you stop? Like, what's the stopping point? Because you could sit and make $500 in 5 minutes, 10 minutes, and then it's like, what's the stopping point after that? Do you stick around and try to take another trade and make it $700 or make it $800 or try to get to $1,000? It's like, at what point are you satisfied enough to stop? I think that's also a hard point for a lot of traders to get to, is at what point are you just satisfied? Because $500 is a lot of money, especially to be made in 10 minutes, right? And so it's reaching that point in your trading where it's like you can be satisfied with making $500, or maybe on a particular day you make $300, and then a couple of days down that week you do make that $1,000 in the day, right, off 1 or 2 trades. It's like not trying to set high expectations on yourself every single day, because I think that's very dangerous as a trader.
Yeah, and it kills you too if you had a lot of losses before it, or years of losses. Then you're constantly trying to fight that. Oh, I need to get back all that money that I lost. So then you struggle to figure out a stopping point, as oh, what if I
you brought up
if I pull off $100,000 today, like Ross Cameron?
You brought up a super good point, is like, if you don't know when to stop, like, how do you judge that? And then a lot of times what will happen is you'll land some good trades and then you'll lose a little bit. And then now you're like, well, I was up 1,000, now I'm down, now I'm only up 800. I want to get my 1,000 back, right? And then before you know it, you're down, well, now I'm at $200. Like, $200 isn't good enough. I want my $1,000 back, and then now you're in drawdown, right?
Well, and
that's
to go
slippery slope.
To go even deeper on that and throw rocks at that concept, is the most dangerous part of that is when you train your brain that it works, right? So like, if you make, say, 500 in a day, you take 1 more trade, it takes you down to, you lose that trade, now you're only up 100, and then you're like, well, I want my $500 back. And so you take another trade and it works, right? And now your brain is trained to know, hey, I can always get it back, or I can take that 1 more trade to get it back. And now you're stuck in that loop of constantly doing that. And then it starts to go the wrong way for you. And you start to blow your accounts, because now you're trying to get back what you lost, because your brain knows that it works. Right?
I can always pull that gambling card out.
And so it's hard to, once you train yourself to think that way, and you train your brain to know that it works, it's hard to retrain it to think differently and think the opposite, right?
It's
and
the
so
same thing with DCAing too, where people, they'll find some success with like peppering orders, right? Or, they'll get in and they'll be like, oh, my strategy is to add more. And it's like, yeah, you can get lucky sometimes and it can work, but long term it's not going to.
No.
So they think it works, so they like get sucked into it. And then it, you get into tilt, or they keep adding size until they just have no more size to add. And it's a very, very slippery slope. And as you said, it's where you get positive reinforcement to do really stupid stuff in the market and trading.
Yep.
And then on the flip side is like when you do everything you're supposed to do, sometimes you don't get rewarded for that, right? It's tough. You
Yep.
lose when doing good stuff. So it's just a really different type of thing than anything else you'll do in life. I think that's why it makes it so hard.
Yeah, 100%. It's just, I mean, of course, every new trader is going to, or everybody goes through it, where you go through the bad habits. Like nobody's gonna come into this and automatically just have those good habits and know what to do. So you are gonna go through the bad stuff, and you're gonna train your brain to think that way. But where you come out on the other side of trading is when you retrain it to think differently and to be okay with that one trade that made you $300 on a Monday, right? Or be okay with you took a back-to-back red trades, you're now down 400 and you need to go outside and go do something, right? Find a hobby and go do whatever, and just walking away. Because like what most people forget too is, and this is something I have, I've been pretty decent at it, and I'm even to this day, like I'm still working on this part and trying to get better at it every single day because it's a journey. But when you realize that you take a red day and that red day is $300, $400, and you can come back the very next day and make that same amount of money, you start to think, you start to find yourself going in a more upward trajectory with trading. Whereas like if you take a $400 red day and it starts to eat at you and you continue to trade and try to get it back and you make that even deeper, well, now that red day is $1,200 or $1,500, and then it's going to take you more than one day to actually get it back, right? See, you could have a red day on a random Monday, say $400 on a Monday, come up Tuesday and make $300, $400, and that red day it's like the red day never happened, right? And so I think if you can get to that point, that's when you start to see that upward trajectory. Because then, if you have more green days and red days, you're going to see yourself making money each week, whether it's a lot or a little, it doesn't matter. You're still making money each week.
Zoom out. That's what it is. It's zooming out and starting to realize that this is a marathon. This isn't try to make the fastest first payout you can at some prop firm and then blow up.
I think too, it's like
kill yourself with that.
Yeah, it's like also too, it's a good feeling when you can get to that point of your trading where you can feel good about a red day, right? If you can feel good about a red day, like you're coming out the other side, right? For me, like if I lose $300, $400 in a day, I feel good about that. I'm cool because I didn't lose 1,000. I didn't lose 1,500 like maybe a lot of people have. I can come back the next day and make that back, right? It's a lot easier
to make your 3-pointers.
Yeah,
that alone is a very hard thing to do.
Yeah,
like if every trader could do that very thing, they would be very profitable. But the issue is it's hard to walk away when you're losing, right? And it's hard to just be okay with a losing day. And if you can figure out how to make that happen and basically control your risk on those bad days and push in on those good days, that's all trading is. It really is. It's just risk management and probabilities. That's it.
Yeah.
I mean, we have this whole base hit system that we use in our assessment, and traders it's really improved a lot of traders as far as building a nice cadence, passing their assessment. The part that keeps me up at night, and I'm sure it does Brian too, is how do we continue that success into the brokerage accounts? We're putting people live quickly. We are 100% trying to figure out how do we continue to improve our brokerage traders. And that starts from the assessment. So the hard part is, we don't want any limitations, once you get to the brokerage. So traders, they get live and they, there's still a good portion of them that struggle in the sense that they think, okay, now I'm in the brokerage. I did what I needed to do. The sky's the limit. And let's say they have a first red day. that really throws them off, because they have such high expectations for themselves. They don't want to get into this nice new clean account that's live, um, and have a red day. That to them is failure. So they start tilting, and they kind of stay with that tilt. So trying to figure out how to get traders to be okay with what we would say is a base hit day, at least for a while. There's certain strategies, there's certain types of traders that can really size into these things and do well. But letting them sit in the brokerage and continuing to take base hits is something that we're always trying to improve on our side. How can we entice them to do that? How can we convince them that it's the right thing as they transition? That's always on our mind here. But it all comes back to how do you short circuit that so they have the attitude and the understanding that if they can just live to trade another day. I know that's a cliche, but if they can just live to trade another day, like, look, you can play this game of basketball where you don't have to be in the game the entire time. You could just wait until it's the perfect time to take a 3-pointer and then just walk up and take a 3-pointer. If you miss, that's fine. Look, you didn't just blow up your account in the process. You waited. And then tomorrow there'll be another game. You can do it again. You can do it again. Start looking at that over time, and you're going to be successful like Joey here.
Awesome.
So yeah, up here on the screen, we've got a promo.
Free static upgrade.
So
and 20% off. So you get the static plus it's an additional 20%. Generally, when we run the static upgrade, it's just a static upgrade at our base price. So it's actually better than normal. Please use Joey's code JM. He was on the show with us today. We really appreciate it. He shared some pretty good knowledge today on the show, shared a strategy. It's not common for a lot of people to share strategies. Provided a lot of good insight today. He's an actual trader. He makes money. That's a huge thing. A lot of people just lose money, and it comes down to a good strategy you can easily explain, follow it, and just be okay with losing days. And that's kind of the start of the recipe. That's the secret sauce. Again, use his code, and also check out his indicator. It's on TradingView. It's a paid one, or there's free ones, but I think it's a pretty good sound system. Feel free to forward test it. Just keep in mind, trading is risky. This isn't to entice you to trade his strategy. It is risky, so keep that in mind. Please respect the risk. Yeah. Josh, what do you got?
That's all I got. Maybe we just wrap it up here. I don't think we got any more questions. Giveaway, yeah, it already happened.
I'll leave you guys with this. I always say this at the end of every stream that I'm on, because I'm big on this. This is super. I would encourage everybody to even just write this down and put it on your wall, right? If you win the weeks, you win the months. If you win the months, you win the year, right? Thinking long term like that, thinking that not one single day should never affect your entire week, right? Because it's just one day. So if you win the weeks, that compounds to the months, that'll compound to the year.
Good stuff.
Yep.
All right.
Yep.
Thanks for joining us, man. Appreciate it.
You got it. Thank you, guys. Thanks for having me.
Appreciate it. See ya.